This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradley above at the top of the screen and everything that we're talking about here. Okay, so Brian Brooks just spoke a couple hours ago at the American Banker webinar, or whatever you want to call it, virtual meeting, and it was really great. There's a lot of little breadcrumbs in here that Brian Brooks drops out, and I just love the perspective of this guy. He just has so much incredible insight on this space, and he's so confident about what needs to happen. You could tell that he is the man for the job. Let's go ahead and pick this up at 5 minutes here, where they changed the conversation from the opener into crypto and the things that we want to hear about. So let's go ahead and start here and let this play out. And then I have two other clips that we'll take a look at and comment on as well. So here we go.
Gotcha. One question, I'm actually going to bump up one question because we're getting a lot of questions on it in the Q&A, so I wanted to go ahead and address it. Let's talk about cryptocurrency, crypto assets, the whole crypto sphere. When exactly would you expect regulation in that area? How is the OCC viewing it? Can you update us on that?
Yeah, absolutely. Well, my guess is the reason that people are asking that question is that we've already made our first statement on it just a few weeks ago, when we issued an interpretive letter authorizing national banks to provide custody services for crypto assets, which is an important foundational move in order for crypto to be in a safe enough asset class for institutions to deal with it and trade it. The thesis we have for crypto at the OCC is fairly simple, and that is we think at this agency that we're in the middle of two macro trends that are not going away. One trend is the unbundling of traditional banking services, and I know we'll talk more about that a little bit later when we talk about charters. But the other macro trend out there is the trend toward decentralization, and that's really what crypto is all about. So when I say decentralization, what I'm really talking about is the idea that for most of the last 500 years, the role that banks played in any economy was they were the central ledger keepers between counterparties. So if you think about it, back in the late Middle Ages and the early Renaissance, when banks were first being created, the point was if the King of England wanted to finance a war and he needed to borrow money from some duke in Venice or something, those monarchs didn't know each other, and they needed a central ledger keeper to be a trusted person to balance ledgers of account. And you had to have human beings doing that, right? So they would do that in book entry form, and there had to be a human being getting paid to do that work. But now we live in a world where computer networks can do that same work algorithmically without the need for an intermediary person. And the ability of somebody to do that by algorithm, algorithms don't commit fraud. They don't make mistakes. They do whatever the programmers told them to do. And algorithms can do that for free, whereas banks require being paid in order to show up and do that work. All of those macro trends suggest to us that over time, many of the functions that banks currently charge a fee to provide will be automated, and they'll be automated on networks, and those networks will become the means through which lending is done, the means through which payments are done, and other things occur. And networks are what underlie these crypto assets, right? Crypto assets are a byproduct of blockchain networks. So our basic view is, if you believe there's a long-term trend toward decentralization of finance and crypto assets are the power for those networks, then we need to start thinking now about how do we make it safe for banks to participate in those networks so that banks remain relevant and so that we can maintain supervision of safety and soundness as the world decentralizes. And by the way, we don't think that's going to happen in 5 years. That might happen in 20 years. But what we do know is our international competitors in places like Europe, in places like Singapore and China have already adopted frameworks for crypto and for blockchain technology in their banking systems. And so my view is we're a little bit late to this party. I want to make sure that we move fast enough to put a framework around that. So again, you've seen our first letter on crypto custody. Expect over the next weeks and months that you'll see some additional commentary on things like payment networks around blockchain, on things like stablecoins and the rules for reserve accounts backing stablecoin projects and other things. But my personal view is this stuff is not a fad. The market cap, which is nearly $400 billion today, is real. And we need some framework and parameters so that people can participate in this in a safe way.
Let me tell you something. That to me is pretty damn compelling. And I'm going to set up this next clip here. Payments networks are blockchains. Blockchains are payment networks. There's the big narrative coming out of this from this little conversation today, which, listen, when I hear that, I hear two things. One, I hear all the hard work come back to mind that Ripple has been doing with the market infrastructure and the long play that Brad Garlinghouse has been talking about connecting the plumbing and the market infrastructure to all these massive entities. I just did a video early this morning about the large, some of the large banks that are connected to Ripple. And we know that that's all about being a payments network. And then I hear, another narrative, which is Glenn Hutchins, who always says that the value is in the protocol or the network. The price of the token is a distraction and, in fact, uninformative. And this is where I feel like we are quickly approaching a moment where these payment networks that are adopted by the banking system, which is exactly what he oversees, runs a real possibility of something very special to take place. By if the XRP ledger is adopted as a banking payment system, as a standard, even though it's a decentralized ledger, this could be enormous for what it does to reflect in the value of the or the value of the token, because of the value of the protocol itself being deemed significant, or, as I've been liking to say on this channel, systemically important financial market utility. So let's keep going. Let's listen to this. Now, this is really the biggest part here, where there's quite a back and forth, which is very, very good. Let's listen, because he also talked about stable coins and reserve requirements for those things. Let's listen here. And I love what he says about the deadline for the FedNow system when they get in the middle of this.
Of the upcoming steps that you just mentioned, the timeline for that, you said a couple months. Are you looking at within this year or next year going forward?
I think you'll see a cadence of commentary from us starting probably sooner rather than later. I mean, I don't want to, I'm not prepared to make news on that quite yet today, but just rest assured we're working on a couple of additional crypto issues now beyond just the custody issue, because we see banks already participating in this, right? So for
real quick, I mean, that to me is extremely exciting. He said in the last clip, over the coming weeks and months, that we would be hearing from him. And then he talks about a cadence of comments that will be coming from them to let you know where they're at on all these different particular areas dealing with cryptocurrency and the many different issues.
For example, we know that banks such as JP Morgan have already created private permission blockchains for stablecoin projects used by their own customers. The question is, what should the parameters of that be, and what would happen if those banks were to open up those networks to other third parties? We know that there are multiple banks that are holding billions of dollars of deposits that are backing stablecoin projects. Stablecoins being basically a blockchain version of a prepaid card where you can use it to pay for things and people can redeem the stablecoin for money held in the bank.
Let's just stop right there for a second. There was a lot right in there. First, he talks about JP Morgan having their own blockchain, which we're well aware of, but, having their own blockchain, and what would be the implication of them opening up to other third parties of that? And one has to wonder, if you understand what Ripple's been doing, if JPM's got their own or JPM Morgan has their own blockchain, that the other bank has their own blockchain, the other one, isn't that the way this was all supposed to come together anyway? In my eyes, it just seems like it's starting to really reveal what has been worked on all these years. Maybe we're wrong, but I don't think so. Let's keep listening.
But we haven't opined yet on what the rules ought to be about reserve requirements, collateral requirements, audit requirements for those things. So these are things already occurring. We need to speak to those sooner rather than later. I doubt it'll be months. It'll be more like weeks, I think, when we start speaking to those issues.
Wow. Now he's talking about speaking to months and weeks on the issues of stable coins and reserve requirements and those things. Look, he calls stable coins basically a modern version of a prepaid credit card. Pretty remarkable statements and insight.
Gotcha. A little bit further into this topic, when you're talking about stable coins, Bitcoins, all these sorts of different cryptocurrencies, crypto assets. Just a quick personal story. A month ago, I was talking to just a police officer through a friend, and he had handed me someone's business card in the form of a credit card. And it was a Bitcoin expert. And he was asking me, I don't understand if this is cash, if it's an investment. So despite, this being around for years, there's still sort of a disconnect between what consumers understand what it is and versus how the banks know it, how investors know it. How do you sort of bridge that gap, especially as a regulator, and making sure everybody understands they're on the same page?
Well, the first thing is I think that the regulators need to communicate more about these kinds of things. And so, one of my priorities has been to make sure that I'm in constant communication with the SEC chairman, with the CFTC commissioners, and with Federal Reserve stakeholders to make sure we're all talking about this. I mean, I probably am the person in a role like this that has spent more time on this than anybody else in the government. So I think I can help kind of advance that discussion. But there are lots of people who've been thinking about it in these agencies for a long time. And so the first thing is we need to get away from the turf issue where, the SEC thinks that crypto assets are all securities and the CFTC thinks they're all commodities and the OCC thinks they're all bank deposits. I mean, we need to have more of a nuance on that. What I would tell people, though, who are trying to think about crypto assets in the first instance is crypto assets are not supposed to be, speculative investment assets. It happens that they have value because people assign them value. But crypto assets are the incentive for people to devote computing power to networks. So remember, we talked earlier about how the role of banks was to maintain ledgers in exchange for a fee. Here, computers are all maintaining the ledger through an algorithm. But in order for someone to connect their computer up to that, they have to get paid in some way. And so the thing that they get paid in is the native crypto asset of that blockchain. The concept being that if I want to use some of my memory on this computer to help maintain a ledger of accounts and to validate transactions, somebody's got to pay me. And so if you think about it like that, what's more important than the Bitcoin or the Ethereum token or whatever is the network. And as the regulator of national banks, what's most important to me is the payments network that blockchains represent. So we'll put some parameters around these crypto tokens that people buy and sell for profit. But more important to that is to tell banks what the rules are when they connect to blockchains and they start validating transactions and earning these crypto assets as part of what goes on. So
now, that is a massive statement right there. For one, he doesn't talk about Ripple or XRP at all. He talks about cryptocurrency being, or cryptos being Bitcoin and Ethereum as an example, because there's rewards there, right, for using the network and being paid and mining and staking. But he doesn't talk about Ripple or XRP. And then he talks about the implications and parameters for banks once they start participating in these particular networks. Let's keep listening.
So that's what we really need to think about is privately created networked payment applications. That's really what crypto ultimately is about in a variety of areas. And again, you'll read more about this from us in the coming weeks.
Gotcha. Well, I'm looking forward to that. I wanted to switch because we have a limited time here. I wanted to switch to sort of what the OCC has been doing in the charter space. You recently mentioned the OCC was thinking about issuing a national bank charter for payments companies. Already, BPI has a real-time payments project. The Federal Reserve has promised the FedNow real-time system by 2024. You have companies like Stripe, Square, and PayPal that are seemingly capable of providing similar services. So how does the OCC's charter sort of fit into that space?
This is an absolute mission statement, what he says here. It is a call to action. He does not by the 23-24 deadline. Listen to this. It's an amazing response.
Well, let's unpack a couple of things you've said, Rachel. So the Fed is working on a project that'll be ready in 2024. Let's just pause on that for a moment. 2024. Today is 2020. The United Kingdom already has a real-time payment system in 2020. In America, the leader of the financial services world will have it in 2024. I think that's unacceptable from a competitive standpoint. Right? This country is a leader in two industries in the world at the moment, financial services and technology. the idea that we're going to allow Singapore, China, the UK, and the EU to leapfrog us in terms of faster payments, much the way that other countries got 5G telecommunications long before we're ever going to have that, should give us pause. It should really give us pause. And so the question I have is, when real-time payments technology is available today in the form of private blockchains that already exist and are transacting $350 or $400 billion of market cap every day, I guess I ask myself, why do we want to wait for those things? So you mentioned some of these bank-owned payment networks, which are far from real time, which have chargeback risk, which have error rates and things like that in them. I just question whether those are good enough for the modern economy. I mean, there's a reason when Chairman Chris Giancarlo left the CFTC that what he chose to devote the rest of his career to was the digital dollar. And it was because of a belief he had that the United States is falling behind competitively in the building of the global financial infrastructure. And I think that, there is a role for the Federal Reserve in payments. Obviously, they have more or less controlled the payment system for a long time. There's a role in private payments, as we see for ACH and SWIFT. But at the end of the day, if ACH is super slow and if SWIFT and FedWire are super expensive, shouldn't we be looking to what the rest of the world is doing as an indication that we're not going to keep up if we don't compete?
Wow.
And so you ask about charters. The thinking about charters is one of the frictions in modernizing the American payment system is that the biggest payment companies are regulated on a patchwork quilt 51 state basis. So if you went to Stripe or Square and you asked them what is their licensing structure, at least before Square gets their ILC charter granted, their license structure is they have 51 state money transmission licenses. And as the former chief legal officer of a company that had 51 state money transmission licenses, I can tell you that it's expensive. The rules are inconsistent across states. The ability to maintain legal compliance in all those states is highly complicated and fraught with peril. And I'm just asking myself, why would global businesses believe that the correct regulatory platform to operate is a patchwork quilt of different rules where Nebraska and New Hampshire see what you need to do differently? That seems crazy. It seems like the reason Alexander Hamilton conceived of the idea of a national economic system founded by a national bank platform would be something we would have learned by now. And I'm sort of puzzled that it hasn't. So the purpose of our payments charter is to say, listen, historically, payments were all done inside of banks. Now some of that activity is going on in standalone companies, but the activity is still a core banking activity. And if we allow our banks to operate nationally using the national bank charter, doing a payments business, why wouldn't we allow Stripe to do that very same business on that very same charter? It's sort of puzzling. Now, I understand there's opposition. The states are suing us because the states are used to deriving revenue and controlling that turf, and that's fine. But, historically, we have a dual banking system in this country. The states have a platform, and the national government has a platform. And I'm sure plenty of payment companies will stay on the state platform if that's the right platform for them. But many of them want a national platform. And since we offer that to depositories who are doing payments, it's just not obvious to me why we wouldn't do that for non-depositories that are doing the very same payments business. And we don't think the law requires that. So that's why we're really stepping on this.
I got to be honest. I mean, he just absolutely slammed it where it needs to go right there. The reality is that and coming from the NYDFS, Department of Financial Services, they're approaching this thing as if, the OCC is stepping outside its remit because they're trying to govern or regulate entities outside of the banking sector. And they want it to remain a state-controlled issue. The reality is that Brian Brooks just laid it down here and said that the OCC, whether you like it or not, regulates banking services. So whether you're Stripe or whether you're Bank of America, if you're providing banking services and payment services, you fall under our guidelines, period. Remarkable. I'm telling you, Brian Brooks is the guy for this moment in history that's happening here. It's just remarkable. All right, one more couple little spots here. Let's hear this and then we'll wrap this, but just fantastic stuff from him. And shout out to Rachel, and I don't know her last name, that asked the questions. They were really great questions too, by the way.
Having said that, the one footnote that I want to put out there is, yes, we do plan to see payments companies come in for bank charters. They haven't done that yet, but we expect they will. But many of these payment companies will be coming in for bank charters that are depositories or that are trust companies or other well-established, kinds of forms. I don't want to suggest that the only scenario in which a payment company could ever be a bank is if we gave them some novel non-depository charter. I mean, we just today chartered a company, or at least finalized, I guess, the regulatory approval process for a company called GECO, which is a really interesting company with a payments play. And they got into this space by buying a full depository bank. Nothing strange about that. But the bank platform helps them do their payments business in a really interesting and innovative way that we think helps the system. Some other payments companies are going to come in looking for trust charters, which don't take deposits in some cases, and yet are clearly legal. And then you've got a species of non-depository charters, which we haven't approved any yet, but which we think we have legal grounds to do. So I don't want people to think about this only in the sense of a novel non-depository charter. I want them to think about it in the sense that the national bank charter in all of its forms has something to offer for companies that do that business.
Just great comments from Brian Brooks. Let's go ahead. I want to jump ahead here to 5 minutes and listen to this remark right here.
Legal authority of banks to do certain things under established law, and those traditionally have been done by chief counsel legal interpretive letters. So I wouldn't rule out the possibility that at some point in the future there could be an issue about crypto that would necessitate a rulemaking. But at the moment, what we're trying to do is sort of say in these interpretive letters, we have existing rules and frameworks that apply to crypto the same way they apply to other assets. So, for example, if somebody said, can a bank connect to a blockchain? We look at our existing rules that say banks can connect to payment networks. And we say a blockchain is a payment network. So thus, we don't need a new rulemaking to just give you that interpretation of our own regulation.
Wow. Right there. Boom. Right? Banks can connect to payment networks. Blockchain are payment networks. So banks can connect to blockchain for payment networks. It's just remarkable the way he lays that down. I don't know about you. When I'm listening to this, the only thing I can hear the entire time is that obviously things are about to change in a very large way for banks in how they can get in and participate with cryptocurrency in many ways as being a service or a product. But when it comes to payments, I don't know any other coin other than XRP, potentially maybe XLM, but I mean, XRP has done the work with Ripple, the blockchain infrastructure company, to set up the market infrastructure to really be able to service these banks when it comes to payments and participating in using their own blockchain networks and being able to connect to a decentralized exchange that can allow them to be interoperable throughout any other network in the world. All right, guys, that's going to do it for me right there. I just wanted to give you the highlights from that talk today. Shout out to American Banker and Rachel. Shout out to Brian Brooks from the USOCC. And make sure you hit the like and subscribe. Leave a comment below. This just keeps getting better. I tell you, I'm very excited for the coming weeks and months that Brian Brooks said that we are going to hear a cadence of comments and information be released on the federal charter information for cryptocurrencies. I'll catch you all on the next one.